6 o'clock. I'm going to call this meeting of the Mazomanie Village Board to order. Meeting was properly posted on October 4th. Roll call.
Harrop.
Here.
Beal. Here. Pearson.
Here.
Mickelson.
Here.
Rulon.
Here.
Schlamm.
Here.
Springstad. Here.
We have a quorum. We will conduct business. Item 4. Are there any additions or corrections to the agenda? And if none, is there a motion to approve the agenda?
I was wondering if we wanted to put number 2 in front of number 1 under new business.
We can do that quick. Are there any other suggestions for change? If not, is there a motion to approve the agenda?
So moved.
By Jeff,
Second.
by Natalie, discussion. All those in favor signify by saying aye.
Aye.
And opposed, same sign. That motion is carried. Item 5, approved minutes from the last regular board meeting.
So moved.
Motion by Jeff,
Second.
second by Scott, discussion. All those in favor signify by saying aye.
Aye.
And those opposed by the same sign. The motion is carried. Item 6, appearances and significant correspondence. I don't believe anybody has signed up to speak on items other than those on the agenda. We'll move to item 7, village president's report, and I have nothing to report this month. Item 8, village administrator report, which is in writing. Peter, you want to just quickly summarize for the...
Okay, been dealing with various FEMA things, including our PA grant, and we got our very first check, just under $10,000. That covers the reclosure project. We're still waiting on word from Michelle's staff about any issues we'd have to take care of as far as ordinance compliance. Been doing a lot of stuff with both the general fund budget, and I've started all 4 of the utility budgets also this last week and a half or so, getting that rolling on that. We had discussions with the sheriff's department, which we'll be talking about later, and discussion with the PSC. They are finishing up our cost of service and our rate allocation calculations, and we should be they should be posting that on their portal and they post that for 5 days for comments, and after that they close it, and then we'll be setting up a hearing. Mark might talk about this too, but he and I met with the Dane County Highway Department about Highway Y and a possible jurisdictional transfer. We just were in it just to find facts, find out what it all entails and what they were looking at also.
Questions of Peter? Hearing none, we're going to move on to item 9, deputy in charge report. Stacy, you did such a nice job last time, I sent you back again.
I'm just short in the report. So I think you all got your copies. I don't know if anyone has any questions. This September was the Wild West Day, so all the calls or whatever from there is in here. I don't know if anyone has any questions.
Good.
Okay.
Very explanatory, self-explanatory.
Thank you.
Thank you, Stacy. Item 10, public works report is second meeting of the month, but Mark, without any comment from board members, because it's not listed for discussion tonight, could you just briefly tell us any developments with the roof at the Historical Society, what's going on there, and brush recycling site?
Sure, I can give you an update on both of those. The roof project at the Historical Society is much more than a roof or shingle covering replacement. There's structural parts of that building that need to be brought into the project. It was very difficult for the Historical Society folks to try and get contractors to bid on a project that didn't have a scope of work. Judy Curtis came to me, I had contractors coming to me, trying to figure out some direction. So Bill Montalbano had been involved on a voluntary basis, and I asked him, I asked to hire him to take the lead from the structural part of the project and create a scope of work. So Bill had just created a project description and a bid description. So the project is advertised this week and next week in the Star, and contractors are reporting directly to him with questions, and they're bringing their sealed bids to the village office. And also at the brush recycling site, we had talked last time about a contract with a landscape ecologist with Natural Landscapes Incorporated. That's a firm that was recommended by Brian Berquist. We engaged that ecologist. Her name is Sherry Leafring. We engaged her with a contract. She came out for her first site visit and stopped work and said that she is reluctant that the DNR will allow a remapping of that wetland, and she wasn't confident enough in that she wanted to engage us with a contract for $4,500 or whatever it was. So she pulled back. Basically, she asked me, she proposed some options. Her first and strongest suggestion was, why don't you allow me to meet the DNR on site with your village engineer and tell them what our plans are and get some feedback so that we don't spin our wheels and spend money on a project that's not gonna move forward. There's a couple different ways that it could still move forward, even if it is not allowed to be remapped out of the wetland delineation, and there's still a possibility that we could get a permit to fill it. So that's what she suggested would be the next first step, was for her and Brian to meet with a representative from the DNR to get a permit to fill the space and explain what we want to do based on the timing with the weather and the lack of another site. I instructed her to move forward and set up an appointment with the DNR and Brian, and that's happening now. That's where that's at.
Thanks, Mark. Items 11, 12, and 13 are second board meeting of the month. Item 14, Lake Marion update. I'm looking at you again, Mark.
Lake Marion. Okay. So we had talked about a celebration at the last meeting. I asked for some funds to get things pulled together. I leaned on Bradley Brunker from the Sportsman's Club and Natalie and Peter, and delegated out the coordination of Lake Marion grand reopening celebration, and it's scheduled for October 19th from 1 to 3. There will be food, beverages, live music, some kids' games. That's pretty much the sum of it, and we've got some of our professional services that have worked with that project sponsoring it. And so the money that I asked for to kick that off, I don't see us needing that. And yeah, it's pretty much well on its way. And
Good. Thanks, Mark. Item 15, update on Mazo 2020 committee.
No meeting.
Item 16, violations of property ordinance.
4 letters have been sent out in the last week or so, and 3 of them have already been taken care of. Tracy is working with 2 different properties on the buildings on them. And Nate has been working with 2 different properties for property violations. One is in the court system, one will be going into the court system. And the person living in the garage is no longer living in the garage, and the garage has been redone, so it's not a living area anymore. So that's taken care of.
Questions? Item 17, flood update, I think you did that already in your
Yep.
report. Item 18, we have no old business, we're into new business. We've moved number 2 up to the top. This is a request for a zero lot line designation for a property located at 718, 720 Forest Edge Drive. The request is being made by Gary Goldendine. The Plan Commission met last Monday, September 30th. I believe there was a full slate of commissioners on hand. And after discussion, there was a motion by Dick Royston, second by Pat Grager, to approve the request for a zero lot line designation for a property located at 718 to 720 Forest Edge Drive, and that motion carried unanimously. And that recommendation then is being offered to you by the Plan Commission for your approval. Is there a motion to approve?
Motion.
By Scott,
Second.
second by Troy. Discussion. Hearing none, all those in favor of the motion signify by saying aye.
Aye.
And those opposed by the same sign, that motion is carried. All right, we're going to circle back to meet with Brent Nelson from Johnson Block to go over the village's 2018 audit. You're on.
All right. Good evening, everyone. Brent Nelson with Johnson Block. I'm an audit manager with Johnson Block. I come out of our Mineral Point office. Handed out a PowerPoint presentation tonight. I was going to concentrate on that, the hard copy. Peter is going to kind of scroll along with me on the projector up there for anybody in the audience. But I do have any extra. Hopefully I got everybody. But yeah, here we're reporting on the 2018 audit. I'm going to stick to the PowerPoint. I have the full 60, 70-page audit report with me. I see a couple copies of it around here tonight, so if there's any questions on the detail, let me know and I can bring out a copy of that, but otherwise I was going to keep it pretty high level, go over the main financial changes for the year. This page 2. We've issued our report on the 2018 audited financial statements, and that's included in the bound report. We issued unmodified opinions, meaning nothing came to, or we believe the financial statements included in the bound report are in all material respects in accordance with generally accepted accounting principles, so that's the highest opinion that we can offer. Before we issued this final report, management reviewed and approved all the financial statements, any journal entries we posted, all that was approved in a draft format before we finalized everything. In addition to the financial statements themselves and the notes of the financial statements, we also issue a couple letters, some audit communications, and we can touch on that a little bit later. In addition to the audit, we also prepare some regulatory reports on behalf of the village. We prepare some tax incremental financing district reports. The village has 2 TIF districts, number 4 and number 5. Those have an annual report that gets submitted to the Department of Revenue, and we file that on behalf of the village. After they see a draft of that, there's some electric and water utility reports that get submitted to the Public Service Commission, so we also file those reports on behalf of the village. Page 3, just the 2018 financial highlights. On the fund financial statements, that's what the village is most likely used to seeing is at a fund level. Overall, the general fund, TIF District number 4 and TIF District number 5 are each individual funds in the audited financial statements. Overall, those 3 funds were pretty flat for 2018. The general fund had a small decrease in fund balance of about $3,300. TIF district number 4 increased slightly, about $79. TIF district number 5 also was pretty flat, a small increase in fund balance. TIF number 5 had some debt issued in 2018 related to the streetscaping work that was done, so there was some debt proceeds included in that. The cemetery fund decreased by just over $30,000 from 2018 activity. Debt service fund decreased roughly $77,000. Part of that related, there were some large debt issues done in May of 2018, about $4 million in debt issued by the village for TIF 4, TIF 5, some capital projects. There was also some refinancing done as that. But part of that also, the existing fund balance of the debt service fund was applied toward paying down some of those debt service costs. Stormwater fund increased $26,000. There's a stormwater utility that has monthly charges. For 2018, there was minimal charge or expenses to that fund with the revenue, so that stormwater fund increased its fund balance from 2018 activity. And then the capital fund increased $531,000, which is misleading because of the debt issue. That I mentioned there was a $4 million debt issue. Those funds weren't all spent by December 31st, 2018. I think they're pretty much spent as of today. There's still a little bit of run out, but as of 12/31/18, where we're reporting that all those funds hadn't been spent. So that shows a big increase in that capital fund balance. The general fund, on an overall basis, reported favorable variance compared to the amended budget. So there's a budget to actual schedule in our audit report. How did our actual results compare to what we budgeted for? And in general, it was favorable results. So meaning actual revenues exceeded budgeted revenues, actual expenses were less than budgeted expenses. So something new the village did this year was pass a budget amendment, I think just after year end. And part of that came out as a recommendation from us. We always recommend that municipalities amend the budget just to show sound fiscal control. And according to state statutes would say the village shouldn't spend funds unless it's been appropriated for in the budget. So, and then also with bond ratings, you know, if the village was showing being over budget, under budget, could affect a bond rating. So that was a recommendation we made last year, and the village did that this year. So, switching gears to the water utility, the last paragraph, the water utility reported an increase in net position, basically a net income of $28,000. The sewer utility showed a large net income in 2018 of $191,000. As we'll dig in later, that hasn't always been that large of a net income. And then the electric utility was the one utility that had a decrease in funds or net position, had a net loss of about $4,300. As alluded to before, the electric utility is going through a rate study right now, so that I think is set to take effect around year end, from what I understand. Slide 4 is just a trend in just looking solely at the general fund balance, not the utilities, just the general fund. This is a 5-year trend of where the general fund's fund balance has been. And overall, as on the far right, December 31st, 2018, right in the middle of about the average of what it's been the past 5 years, ending at the end of 18 of $305,000. General fund unassigned fund balance represented 7.8% of 2018 expenditures. The village has a policy establishes a minimum unassigned fund balance equal to 18 to 22% of total general fund expenditures. So comparing where the village was at 12/31/18 compared to the village policy, it's below that. And I'll dig into that a little bit here on the next slide. Overall total fund, when I say the village's policy is just looking at unassigned fund balance. Overall total fund balance is 19.5%. So if you looked at total fund balance, it's right in that range. But as I'll on the next slide here, general fund balance has multiple different categories. There's unassigned, meaning the village can use at its discretion. And then there's what is the biggest component, 60% of the village's fund balances in non-spendable form. And the biggest driver of that is the sewer utility owes the general fund, has a receivable on the books, or the general fund has a receivable on the books of $155,000 that the sewer utility owes that. And we're required to show that as non-spendable fund balance. The village can't go out and spend that money at the general fund because the sewer utility has to pay it first. So overall, if you look at total fund balance, the village is right in that range, but that's such a big component, it's non-spendable, that it's below that range. So the sewer utility and the general fund have a structured repayment schedule when that will be repaid. Depending on the sewer's cash flow, though, that can change. The village can change that. I know this sewer cash flow has improved significantly in the past 5 years, so the village can reevaluate that. But the annual payments, repayments are typically in February is when that happens.
So Brent, before you get off that, if, when we get the sewer budget done and it looks like there's $100,000 excess that we could use to pay back, that's simply going to improve our unassigned fund balance.
Yep, so if the sewer took that 100,000 and paid it off to the
Yes.
general fund, all of a sudden general fund, unassigned fund balance would be 100,000
Yeah.
higher.
Do we have to change, do we have to amend our budget if we do that? Sewer paying general? We wouldn't have to amend our general budget, would we?
No, it really isn't even a revenue and expenditure
Right.
type of, it's a
Cash.
payment of a
Yeah.
receivable, so I wouldn't see any need
Okay,
to do that.
all right.
Right now, the sewer utility gets charged, the general fund charges the sewer utility 3% interest. That's just assuming, you know, the sewer utility, when it didn't have the cash flow, would have went out and borrowed, it would have got charged interest, so. The general fund's actually seeing some interest income from having that receivable on books. But it's definitely something to consider. Page 6, looking at governmental revenues, so this would be the general fund, TIF districts, debt service, capital projects, looking at all those. The biggest revenue driver of the village is taxes, making up 66% of total revenues of the governmental funds. Followed by public charges for services, 12%, intergovernmental, 11%. In the middle of the handout, there's a comparative look, 2018 revenues compared to 2017 revenues. A couple of those categories changed quite a bit between years. Intergovernmental decrease, or intergovernmental went up significantly in 2018 versus 17. And the biggest driver of that was being eligible for the expenditure restraint program in 2018, whereas in 2017, the village wasn't eligible for that payment. So that was about a $28,000 payment. Public charges for services were down. There was a house raising charge that went on the tax roll. So 2017 revenue was inflated there for that amount on the tax roll. And then miscellaneous income was up, you know, roughly $80,000 between years. There were some insurance proceeds received as part of the flooding related to several departments. And then TIF 4 has a developer agreement, whereas if TIF 4 shows a loss for the year, a local developer is required to pay the village the difference. So for 2018, TIF 4 was running a loss. So the developer was required to chip in $32,000 basically to make TIF 4 whole for 2018. Going forward, TIF 4 is projecting out to have positive increment balances through the rest of its life. So I'm not currently envisioning that would be required again. Page 7 is a look at the property tax roll, 2018 levy collected 2019. The biggest piece of the tax roll of the village residents goes to the school district, 45%, followed by the village at 31%. Overall, there wasn't much change in this breakdown between years or the tax levies for any of the taxing different districts between years. Increases range from 1% to 3%, overall pretty steady. Page 8. Just looking solely at the general fund tax levy, how has that looked over the past 5 years? And the general fund, so this would be your general fund, capital projects, debt service, what was levied to pay those expenses. And that's also, has been really steady the last 5 years for the village's levy, ranging anywhere from 1.27% annual increase to about just under 3%. So it's overall been pretty steady. Page 9, looking at all the property within the village, what is the equalized value of that that's taxable? 6-year look here, and that's over the past 6 years has been a steady increase in that value within the village. Over the past 6 years, it's been over a 12% increase. On an annual basis, it's ranged from anywhere to 2 to 4% increases annually. The 2019 numbers have since been released, or were released in mid-August, and that was 173 million, so that was another 7.5% jump, so between 18 and 19. The net new 2019 net new construction was just a bit over $1.5 million. And that gets a lot of focus for municipalities because that's a base building levy limit adjustment. You can increase, the village and all municipalities have limits on how much they can increase their tax levy. One thing they can increase it for is net new construction that occurred within the village. So when the village goes to prepare the levy limit worksheet, it'll account for almost a 1% increase that it can go up just because of net new construction.
Does this include the decreased valuations on the flood damaged homes?
So I'm just thinking the timeline in my head. So this would be as of 1/1/19.
Okay, no, it didn't then. It didn't.
Yeah, so I was
Because-
thinking not.
No, those were just finalized in June or July, as I recall, June.
Order review.
Yeah, so really, we're at about a break even. The decrease in assessed valuation on 30 flood damaged homes, the value of improvements was taken down. I think 9 of those homes, the improvements were decreased to $100. The other 21 had decreases in varying amounts, so our net new construction was offset by the decrease in flood damages. So we're essentially working with the same budget, same levy, if you will.
Okay. So yeah, but yeah, it doesn't sound like it would be in this number, but yeah, so more of a consideration for next year's probably levy limit worksheet. Is that?
Yep, yep.
It sounds like it'll be 0, more than likely, or right around 0. Page 10, trend in shared revenues. When I say shared revenues are tax revenues that go to the state, and then the state's required by law to distribute those funds out to municipalities. And shared revenues can be used at the discretion of the village. Overall, shared revenues that the state's been passing through to municipalities has been pretty steady the past 5-6 years. The one reason that 2017 on the graph really went down so much was because for 2017 the village didn't qualify for an expenditure restraint program, which ranges from $25,000 to $30,000 a year. There was a change in the way that was calculated in 2017, which was a big driver of why the village didn't qualify. Down below, I showed what the estimated 2019 and 2020 shared revenue estimates are for the village, and that's right in line with all these years except for 2017. So, but it's important to consider now the expenditure restraint program for 2021, because What determines if you qualify will be, they'll look at your 2020 budget compared to your 2019 budget. And if you qualify, that'll get you a payment in 2021. So it's important to consider that now, and there's strategies that municipalities can use, so if the village ever has any questions, feel free to reach out to us. But it's a big chunk of money if you don't qualify, so it's important to consider that. Slide 11, switching gears to the utility side of things. So the water utility, 4-year trend, revenues on the left, expenses in the middle, and then calculating a net income. 2018 had a net income of $41,863, just looking solely at the water utility. As you can see, the water utility has had real strong rate of return, strong cash flow for 4 or 5 years at least. Revenues were up a little bit, interest income was higher, I think with the debt proceeds during the year. Expenses were up, $340,000, and some of that was tied in with the flood. That led to some repairs required in the water utility. Hydrant got relocated and some other just general repairs. So even though expenses were up, the water returns were strong still for 2018. Sewer utility is where we really see a big change in recent years. Sewer utility increased its rates in early 2016 and hasn't changed rates since then. So overall revenue has been pretty steady. There was some increased industrial revenue in 2018 for the sewer utility, but where that profitability is coming from is less expenses. So with Dane, Iowa, so the sewer utility gets billed monthly from Dane, Iowa, and their monthly charges have decreased significantly. I think for several years there was some phosphorus testing, from what I understand, and that more was getting passed through to the village, not just the village of Mazomanie, but the other member municipalities. And now I think there's some debt that just got paid off by Dane, Iowa, so that may continue to trend downward. I guess I'm not exactly sure Dane, Iowa's situation, but I could see that expenses continuing to go down. The electric utility, new rates were implemented in the middle of 2015. The electric utility is going to be implementing new rates again at the end of 2018. The net income for the past 4 years kind of shows why. It went from a positive or net income in 2016 to a loss in 2017 and an even bigger loss in 2018. Big driver with those expenses, the cost of power has just continued to increase, which has led to increased expenses.
Our rep from Alliant tells us that they anticipate very, very minimal increases in purchase power over the next few years. Am I correct in saying that, Peter, because of the decrease in corporate tax rates? So and that's held pretty much true for this year. We budgeted more than we've been spending thus far this year in purchase power. So that's correcting itself.
Yeah, the electric utility's rate of return is something that gets calculated in the PSC report, was about 1% return on assets. And I think this rate, I haven't seen the rate design and the rate study, but I'd imagine it'll be closer to 4 or 5%. So I expect to see, not for 2019, I'm not sure what profitability will be, but 2020 sounds like we'll be back in the black. Slide 12, just a schedule of long-term obligations of the village. Governmental activities is the first schedule, so that would include the TIF districts, the general fund, general borrowings for capital projects, beginning of the year balance plus new debt issued, and the increases less the decreases the debt principal paid off during the year. So there was, for the governmental activities, there was a little over a $4 million debt issue in May 2018. At the end of the year, roughly $4.2 million outstanding between the general fund and the TIF districts. Compensated absences, that would be employee vacation and sick leave that they would be entitled to the following year. Business type activities would be the utilities, clean water fund revenue bonds, the $296,000. So that is debt in the name of the village of Mazomanie that was being paid by Dane, Iowa. And that is zero as of today. So I'm not sure how Dane, Iowa's costs have changed in 19, but could lead to some savings there. So that number is zero right now, the clean water revenue bonds. The mortgage revenue bonds, the water and electric utility issued $1,460,000 in debt to fund various capital projects in both those utilities. Total utility debt was outstanding at year end, $4,165,000 in mortgage revenue bonds. Some general observations: the state sets a limit on how much debt, general obligation debt, the village can issue. That limitation is 5% of the equalized value in the village. So you're capped at about $8,054,000. So comparing that to what the village is at $4.3 million, so there is some debt capacity there if the village did want to issue any more debt. Not saying to issue more debt, but there is capacity. Then the last, just kind of slide 13, some overall conclusions. The water utilities continue to have good returns. Sewer utility has really turned the corner, is having really good returns. Electric utility, I think, will right the ship with the new rates, and hopefully the cost of power stays steady. I alluded to the audit communication we issue in connection with the audited financials. I don't know, Gary, if you wanted me to go through those, or if anybody had any comments on those.
I did. Just some questions for you, Brent, if I could. First of all, on your comments on tax incremental financing districts, TID 4, termination date is 25. So the first year that we would have that increment available for budget purposes would be 26, but I believe, Peter, does this end before April?
The date is September, I think,
So it ends in September of 25?
25, yeah.
Yeah.
So does that mean that in 26, that increase in equalized valuation and subsequent increment is available to us for budget purposes?
So the village could have the 2026 revenue that could stay within the TIF. It may still need it to recover all its costs. If the TIF closes after April 15th, which I think is the date, if it closes after April 15th, 2025, then the increment generated, it would generate an increment, which would be collected in 2026. Which I think based on some projections, it looks like TIF number 4 will need that revenue in 2026 to recover its cost. Things change.
So 27 would be the first year we'd see an increase in equalized valuation
That's how I
yeah,
project that to
Okay.
work.
that's what I thought too.
The expenditure period ends in 2020. I'm not aware of TIF District Number 4 having any projects on the horizon. But if you do, the clock's ticking on that.
That's September of next year.
So if the village did decide to do a late project and got it under contract before 2020, it could. And then there is the ability to extend the life of that TIF for 3 years. So let's say, hypothetical, the village decides to incur another couple $100,000 project in the TIF that's eligible for the project plan, and the 2026 revenue doesn't recover it, it could extend and get revenue in 2027 and 28, that could still go to the TIF. So, I don't know, it sounds like that answers your
It
question.
answers my
Maybe
question,
maybe
yes.
more of that.
Yeah.
I have a question for you, Brent. Would that include, any expansion of any business that is in TIF number 4 if they did not use TIF money, or is that only if they would use TIF money?
You know, the cost has to be eligible per the project plan. So I'd have to do a, and I'm not real familiar with TIF 4's project plan. But we could, I don't know if, has the village considered any, or is the village pretty set on TIF 4? Just, at this point, just basically in a payoff phase.
We might have an
Pretty much,
expansion,
it could, there could be expansion, which is,
but not
why
knowing if
I'm
it's any
asking.
TIF
It's-
expense.
yeah, and it's not anything that's definite yet.
Can you remind me, where's TIF 4?
It's industrial
Industrial
park,
park.
basically.
And TIF 5 is downtown?
Yep.
But if this expansion that I'm thinking of goes through, they probably will not use TIF, but it'll be added to the increment.
Right.
And I think that'll be fine.
Okay.
It'll just lead to more revenue in the TIF.
Right,
Yeah.
right,
So it may end up not needing the 2026 revenue, whereas it maybe could close before April 15th, 2025, to get on the village tax roll
Mhm.
earlier, to free up that.
okay.
But yeah, my projection was kind of assuming that TIF 4 increment would be pretty steady for the next 5 years, but if it happens to jump up, maybe it could close earlier.
So I'm looking at last year's management report, and you had recommendations on labor and insurance allocation of village staff time. You had recommendation on budget amendments, which were taken care of. You critiqued outstanding checks, and we didn't have a credit card policy, but I see those are not on this year's report, so I'm assuming that staff did a good job of cleaning those issues up.
Yep, yeah, we struck, I'd say at least 4 comments that we had in last year's letter that we were, saw satisfactory addressed, so we didn't see the need to repeat those. So yeah, there was a letter shorter this year, for sure, just because some of seeing those items get
So
addressed.
it looks like the only criticism, I would call it, that can be corrected by staff is payment of invoices. Where invoices were paid without department head approval, but that's been corrected now.
Right, where Mark is seeing the bills more often, I mean, not more often, all the time now, because we're entering them as they come in as opposed to doing it all in one big batch.
Okay, so we've got that under control, so that won't be on this year.
Yeah, there was a couple comments, just things we saw that we pointed out, didn't rise to the level of being what we call a material weakness in internal control, significant deficiency in internal control, but we thought they warranted adding to this letter. So yeah, we'll revisit these next year during the audit.
One last question on the management reports, and there's always a criticism on segregation of duties. Do you ever see us being able to implement enough procedures that we can eliminate that from this report? Do you see an improvement? Do you see?
Yeah, as far as an improvement, one thing I'll point out, Gary, I'm not sure if you noticed this or not, but there's 2 levels of deficiencies in internal control. There's a material weakness,
Right.
which is kind of the bigger deal, and then there's a significant deficiency, which is an issue, but it's not as big of an issue as a material weakness. So one thing we did is we always had been calling it a material weakness, the lack of segregation of duties. And we knocked that down to the lesser significant deficiency. So we have seen improvement. As far as removing it from a significant deficiency,
got one question on the audit. And I'm looking at page 5. We've got a developer payable of $1,385,869. Is that the pay-as-you-go portion of the Cardinal project that the company paid for? I see that balance hasn't changed from year to year.
So that was, yeah, that liability's been on the books since I've been with Johnson Block.
Okay,
Maybe not quite that long, but a long time. And my understanding is when those initial TIF 4 improvements were done, those infrastructure costs, there was an agreement in place that, I believe it's Cardinal, would pay for these costs up front, and then if the TIF proves to be successful, it will pay those costs back. So when the TIF closes in 2026, I would see the village writing a check to Cardinal for that amount. Is kind of how I perceive that liability. Is that your understanding of that?
no, I thought the TIF would have to generate sufficient revenues for us to pay that back.
And you don't, and I think it is.
Do you? I'd be happy to write him a check if there's sufficient revenues.
I can show you I can email you kind of my projections of where the TIF will be at in
Okay.
7 years down the road.
No, that's great, that'd be good news.
And I can send you the backup paperwork I have on,
I don't need the backup, just your projection is fine, Brent.
I was or the backup for where that liability
Oh,
originated.
Okay.
That would be
Sure.
helpful. But yeah, I'll email that to you or Peter. Because yeah, based on my projection, it was looking like the TIF would generate revenue sufficient to be able to pay that back.
good.
So if that's the case, the TIF will have to start holding on to some cash to be able to write that check
Yep,
in 2026 or 2027.
good. I hope we can write a check for that, that'd be great.
That's good to hear there's some new development going on in there that'll get added to the TIF
Yes.
tax roll too.
Good report.
Thanks. Any questions? I know I tend to talk fast.
You know, I think there's, from what I've seen over the past 5 years, there's been some nice improvement in the management, the way our staff is handling things, the way they're addressing these management issues that you're reporting on an annual basis, and are you guys pleased?
Yeah, I think, the village made some changes that I know specifically on the utility side of things as to how it was budgeting. I'd say we had less audit adjustments this year than we've had in prior years, so that's always a good sign to see that number going down. That means the less audit adjustments we're doing, that means the more the village is taking on itself to do. So we'd like to see that number continue to go down for all of our clients.
Questions of Brent? Thank you.
Thank you.
Appreciate your time and appreciate the good report.
Thank you.
Thanks, Brian.
Thanks, Brent.
Thank you.
Okay, moving on to item 3 of new business, reappointment